how to trade with market hours in mind. Number one, liquidity considerations. Well, we think about movement, we think about liquidity, we think about participation in the market at any one time. Immediately we think of that Monday morning open in currency markets where participation is lower, bid-offer spreads can widen, markets can have more exaggerated or exasperated moves to fairly limited news. Is that something that you want to be involved with? The other time, of course, is when you get those rollover periods from the end of US trade into Asia, for example, participation lower, and you can get more exasperated moves. So that's another consideration within that 24-hour period. Number two, trading the equity market open and close. If you're an index trader, think about that first 30 minutes of the cash market opening. You can get really irregular moves playing through, irrational moves at times on fairly limited news. Bear in mind that that's the time when markets are discounting all the overnight leads, when you're getting margin calls, FOMO, emotional buying and greed playing through. And after that first 30 minutes, things kind of settle down and that will impact the index as well. And then, of course, you've got the closing situation. But that first 30 minutes of an equity open can be interesting times. Number three, session characteristics. If you're trading 24-hour markets or near 24-hour markets, do try and break it down into the individual time zones. So you've got European trade, US trade and Asian trade. Understand the characteristics of the market, range expansion, volatility, and how does that fit in with your trading style? Number four, data and event risk. Consider event risk. Most of it's known, and we can see that on the economic calendar. It comes out at the same time every month, whether it's a Fed speaker, non-farm payrolls or FOMC meeting. Our job as traders is to manage risk. So we know where that stands within the time of day. Our job is to understand what assets could move and the propensity for movement. Do we want to be involved around that as well? So check out the calendar and understand the event risk that's coming up within that 24-hour period. Number five, running a trading journal. For me, a trading journal is an absolute must if you want to improve as a trader. Continuous improvement only works if you're documenting a review. Whether you're a discretionary trader or you're analysing your expert advisor or systematic strategy, analysing whether the system is working well in Asia, in Europe or US and across different asset classes as well. A documented situation will tell you what's working and you can improve much more as a trader from that. A trading journal is a must. For more information about market trading hours, head to the Compare Forex website and have a look at the trading guides.